Let's bring in Paul McCulley, PIMCO's former chief economist. Paul now teaches Fed watching at Georgetown. What a course that is, Paul. I want to know who your best student is. I want to have him on the show. In terms of what Steve was just mentioning and the notion of the unknown of bank stress and what the Fed is doing, do you think that this is a huge mistake? You already thought that the Fed should have paused.
I'm not sure it's a cardinal mistake. I wouldn't have done it. But I think they're very clear about the whole issue of wanting to separate the acute phase of the banking issue and the chronic phase. And I think the acute phase, which is actually banks going down and we losing our weekends waiting for the resolution, that seems to be drawing to a close. So from that standpoint, you can say it's stable. But the chronic problem is that where the level of short-term interest rates is, and given the deep inversion of the curve, it is a chronic drag on bank profitability, reducing NIMs, reducing risk appetite, leading to a pullback in bank lending. So I think we are shifting to the whole notion of the credit tightening, taking over the lead and weakening the economy, and he's uncertain of how much. So effectively, he does a lot of hand waving. I didn't think he was terribly comfortable in front of the podium today. That's not a criticism, just an observation, because there basically are paused, but don't want to say that, and are waiting to see just how nasty the credit tightening is going to be.
How many more banks would have to fail, Paul, in your view, for this acute phase, as you call it, to continue? Because you said that phase is probably over, and yet we're witnessing in the after-hours session PacWest down 50+%, and that's on top of huge declines that we've already seen this week. It feels like the same story is playing out here right now, with that same sort of like what is going to happen to this bank, which is reportedly considering strategic options, including a sale.
Yeah, it's hard to make a sharp line between acute and chronic. And after First Republic, we could say, and Jamie said, the acute portion is over, and we will still have some more. Can they be handled, without us being up all weekend, every weekend, in which case it's a chronic issue. But the real issue, I think, from a policy perspective and how it feeds back into how they handle monetary policy is I think the credit tightening is going to be very meaningful, because even if you don't have flight of deposits in a run fashion, I think they will keep walking for the higher rate alternative, which is now a 5% on a money market account. So I think chronic's going to last a fair amount of time, is going to weigh on the economy. And I think the day was the last hike, and the next move will be an ease. And I think that's probably what Powell was stressing the most, is he knows that we think that, and he was pushing back on it, because bottom line, he wants to see a weaker labor market.
Professor Paul, it's Tim. You indicated you wanted a pause for this event. 345,000 jobs were added in the first quarter. The Fed always overstays the party. Are they staring at the wrong numbers right now? Because that number means very little looking forward. I get the sense that the employment numbers being so strong are throwing everybody off.
I think that's right, Tim. They were stronger than I anticipated in the first quarter, particularly because they were driven by the 500,000 in January. And they've been surprised that the labor market has been as stout and sturdy as it has been, and they want it to soften, and that will be the bell ringer for them, that they can actually say, yes, we paused, and not push back so hard on us with respect to the easing that's priced in. But we're not there yet. And meantime, we have this chronic condition that I think is a really tight vice on Main Street lending, if you will. So that's the real tension we have in the system. And I think it will be resolved in the notion that the tightening credit on Main Street will dominate, and the job market will slow. But, I have to recognize that I've been anticipating that, and it's been sturdier than I think.
You said the next move will be a cut. When will that cut be, in your view?
I think, sometime after Jackson Hole. which would put it into, the fall months. And Jackson Hole, and we've talked about this before, it's been hugely important to me as I look out on the forward calendar, because it was last August when he gave his famous pain speech, and they've tightened a potload since that stage of the game. The economy slowed, inflation's going the right direction. We have a chronic banking issue. So I'm looking at August at Jackson Hole as the time where he can give a more fulsome sort of speech about the notion we are now sufficiently restrictive. In fact, we might be just a little bit too restrictive. So between now and then, I think it's going to be a choppy period. And I'm not terribly optimistic going forward on the capital markets. I'm not a big screaming bear, but I'm not optimistic like I was at the beginning of the year, because the markets are not cheap right now.